What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Good morning to you out there. Early morning for a live stream on my end, but it is CPI day, so we're going to react to the live CPI drop over here in the United States for December of 2024. And let's jump right into it. I'll share my screen. So first and foremost, always go to bitcoinandmarkets.com to get on the free email list to get all my content. I've been releasing a lot of podcast versions of stuff recently, so check that out. It doesn't go out on the email, actually. It's just at bitcoinandmarkets.com and in all your podcast apps. So check that out. Okay, so this is what we're waiting for right here. CPI. This is the BLS website. We have 2 minutes. We'll refresh this and it will come up right over here. If we look at the Cleveland Fed's inflation nowcasting, scroll down here, we can see CPI by month. Their December of 2024 estimate is 0.38. That would be rounded up to 0.4. I think it'll be an undershoot from that. Core is at 0.27. So if we look at the year over year, what that makes year over year for December will be 2.86, and that would be rounded up to 2.9, and 3.28, that would be rounded up to 3.3. So that's what the models are saying. Of course, each investment bank and stuff, they put out their own numbers. So we'll have to, everyone has their own way of estimating this. I believe that it's going to be an undershoot. I've been waiting for a return back to lower CPI. Of course, it's not that high of CPI right now. Yes, around 3% is higher than the target, but going into recession, we should see an increase in deflationary pressure, and CPI will fall, interest rates will fall, dollar will rise. Of course, many people would say, oh, this is bad for Bitcoin, but Bitcoin is becoming a strategic asset, a counterparty risk-free asset, and so it could be bid higher, as gold usually is bid higher in the very early stages of recession. Only about midway through does gold then fall. But let's refresh. We're still in November. We'll read through the statement and everything when it comes up. Still November. 75 people watching, guys. I'm live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching on Twitter, jump over to the YouTube and Rumble, like, comment, subscribe over there. Appreciate that. I will be checking the chat here in a second. December is out. CPI for all items rises 0.4% in December. Gasoline and shelter up. Okay, so we did expect the gasoline part because oil, we looked at that yesterday. I had a Telegram exclusive live stream yesterday, so we looked at a bunch of the charts and went over some videos, had some fun with the community over there. But we did look at oil prices. We're up from about $67 at the beginning of December, up to $72 at the end of September. That's not a whole lot, but that would be about 7% or 8%, something in that range. So that's not gasoline, that's just oil, but gasoline will also be reflected in that as well. So gasoline is up and shelter is up. We've been waiting for shelter to come down. That was the big lagging indicator that we've been waiting for. But let's read through this section here, or this statement. Okay, it is a seasonally adjusted basis after rising 0.3% in November. Now, we don't know what this 0.4% is. It could be 0.35%, but we'll have to wait and see more of the specific numbers. They'll release that a little bit later, and we can look at the charts. So you reported today, over the last 12 months, all items increased 2.9%. Okay, so that is right on target with what we looked at. Index for energy rose 2.6% in December, accounting for over 40% of the all monthly all items increase. Gasoline index increased 4.4% over the month. So that's a pretty big number because that's a significant proportion of the index here. The index for food also increased in December, 0.3%. Food, okay. previous 4 months. Indexes that increased in December include shelter, airline fares, used cars and trucks, new vehicles, motor vehicle insurance, and medical care. The indexes for personal care, communications, alcohol beverages were among the few major indices that decreased over the month. So we are looking at shelter and energy. That's the big one. For core, though, shelter is the big one because they strip out the energy and food indexes for the core, right? Because those things are much more volatile, and so they're looking at more sticky type inflation for core, and shelter is the biggest part of that. I think shelter is about a third of the overall headline number, and it might be up to half. I'm not sure how much of core, but let's take a look at these numbers down here. And we have, I want to look at shelter specifically. So shelter isn't really up all that much. We have, I mean, rounded. It's hard to see if it's up any because it is rounded to the nearest tenth. But 0.3% in November, 0.3% in December. October, see, it was higher, 0.4%. And going all the way back to August, we have 0.5%. So this is lower. Earlier on in these numbers, if you go back, we're looking at shelter at 0.8%, at least 0.6% for multiple months, and that was keeping the CPI from falling as fast as it would if you take out shelter. Let's do that. I'm going to Google Fred CPI less shelter. We're going to go to that chart as soon as it comes up. Here we go. And change it to month over month. Now, month over month is what we care about because year over year is just a summary of month over month, and it is not very sensitive. Okay. All right. So here we have CPI less shelter. So if you just take shelter out, and a lot of people don't like that idea because, of course, shelter is a huge bill that we have to worry about every single month and every single year, whatever. But it is a lagging indicator. Okay. We do not sign a new lease, excuse me, or buy a new house every month. So you sign a lease at least for 1 year. Some places much longer than that. There might be rent controls, all sorts of other things. And it takes a while for this turnover to happen. Okay. So shelter is by definition a lagging indicator of up to 12 months. And then you have to have the owner equivalent rent, which then would take another, say, 12 months for it to permeate through the owner equivalent rent for these people. Because what owner equivalent rent is owners of houses, they get surveyed and they ask, like, if you were to rent your house, what would you rent it for? Well, they're going to be less sensitive than actual rents. And so after the rents change, it will then take another period of time for the owner equivalent rent to price that in. So it's on a big lag, at least a 12-month lag for shelter, if not a 2-year lag. And so if we take that out, if we take the lag out of the numbers, that's what this is. CPI less shelter is more of a real time CPI. And look, we see it's been bouncing around negative month over month for a long time. If we go to year over year, let's see where this is year over year. Year over year, 1.6%. So this is more of a real-time CPI. Now, another thing is the interest rates. The 10-year yield is still going higher. Let's take a look at that. So Bitcoin actually is responding positively to this news. Let's go down to the 5-minute chart and see. What's going on? Yeah, big upper candle. We'll see though that a lot of these initial moves are reversed on the day. But anyway, let's go to the daily and go to the US 10-year. And it's falling rapidly. Okay, so it's not showing any reacceleration month over month, really. And so this might, we'll see how the market reacts to this. But as interest rates rise, that means money is loose. That means the economy is doing well. All right. So we could see, one of the things I've been talking about for a long time is the transitory nature of CPI, which it was. It went from 2% up to 9%, back down to 3% in a very transitory way. Remember this lag that I said was built in 12 months to 2 years. So you should expect these big humps in CPI. We saw some in the 70s. We saw one here in the 2020s. And we should expect those humps to be a certain shape. It's just built into the way that the CPI is constructed. It's not a coincidence that this hump looks like the previous humps. Let's go to the chart. US IR year over year. That's what we want. And it's going to be on a monthly. Okay, I have some arrows here, but let's go to regular. Okay, let's just take all these arrows off. So if we go back to the 70s, right? People are looking at these humps being like this hump. And this is just the preparatory hump. So see this preparatory, this one hump that we've had here. They say, oh, it's like this one hump, and now we're going to go back up on a second hump. We're living in the great inflation, the 1970s all over again. Of course, the situations are almost complete opposites at this point. But the reason why these look the way they do is because of the actual structure of CPI. It's a month over month reading. It's a cumulative month over month to get to the year over year. So this month was 0.4. Last month was 0.3. Let's add that together. Then 0.3 and then 0.2 or whatever it was in the previous months. You add all those up and you get a year over year number. Now, if we have a really high CPI this month, that won't be represented fully in a year over year type number until it starts moving forward, right? And so that's what this is. It's basically a 12-month cumulative 12-month cumulative number. And as some big numbers get priced back out, so they drop off of 12 months ago, it's 13 months ago now, and then 14 months ago, this is the base effect, they call it, for CPI. We get the downward slide, the transitory up and down. I don't know how you can look at this chart and say this wasn't transitory, but this is just how it's baked in to the cake. If we look at the month over month, USIR MM, you can see that. Did they already get this in here? Oh, wow. They already have that number in here. Great. You can see that this went up right here. And I have a lot of other stuff on here. Need to get that off. Let me just delete that. Okay. So we have this rise right here in month over month. And then all of a sudden, boom, a brick wall. Okay. That was the end. And that has now it got priced out. It just these high numbers slowly got moved out of the 12-month moving average or cumulative. And so that's what we're facing here. So anyway, where was I at on this? Where was I talking about? Oh, the US 10-year. So if we go to the US 10-year, as this goes up, okay, go back to the daily. That means that there is some relative loose money, and people don't understand that. Going higher means, according to the interest rate fallacy of Milton Friedman, higher rates means money is loose. Lower rates means money is tight. All right. The opposite of the conventional wisdom. So as the 10-year goes up, we should expect CPI to rise. And I have been surprised at the strength of this rise, especially since Trump has been elected. We'll see if that reverses with the inauguration. But the 10-year being higher like this than expected should make us see the CPI higher than expected. So it matches. These things match. So anyway, that's it. Let me check the comments and see if there's any comments out there. I'll go to the BLS website while I take a look at comments. Heat proof friends, what's up? Hope all is well with you as well. Yeah, it's a little bit early for me to be live streaming 8:30 a.m. Usually I'm around 3 or 4 in the afternoon. But guys, I try to live stream Monday, Wednesday, Friday at that time around 3 or 4 p.m. Eastern time. I do live stream on YouTube, Rumble, Twitter, and Telegram. I've also started doing very brief live streams over on Telegram to try to build up that community a little bit more. Yesterday, we did a live stream that I thought was going to be about 15 minutes, and it turned into an hour and 10 minutes. So that's fun. I do have open mic for that if you want to jump in and make your comments, ask your questions, tell me where I'm wrong, tell me what you're thinking about what's going on in Bitcoin and macro. But yeah, so that is going to be it for today, guys, in this brief live stream. Join me at bitcoinandmarkets.com. Also, check out the pinned tweet for my links to the Telegram and YouTube and Rumble and all that stuff. Appreciate you guys. Hope you have a great day, and I'll see you on the next one. Bye.